profitability ratios. So why we use profitability ratios? To assess the performance of the business. Performance of the business. Performance means how the business is, doing in the industry. Like if I talk performance of a student, it is measured by the grades, right, in the exam.
Yeah.
So same thing here, how business is performing in the industry in comparison to its competitors. Okay,
Right.
so to check that we use profitability ratios. If suppose last year business made profit of $10,000, let's say, which year? Last year, 2022. And this year, 2023, business made profit 15,000. So tell me, the performance of the business is good or bad?
It's good.
Good, because profit is increased. It means we can say that profit is the main, we can say, criteria to assess the performance of the business, right?
Yes.
The more the business is making profit, we can say the business is performing more better. So in this category, we include, see, which all ratios. First, we will include gross margin ratio. Gross margin ratio. Okay. Then next ratio we include is net profit margin ratio, or you can call it profit margin ratio. Profit margin ratio. Right? Two ratios. Let's see what is the other ratio we include in this. Gross margin, we will return on capital employed also there. So third ratio will include, and that is what? Which one? Return on
capital employed.
Return on capital employed. Capital employed. Okay, so we will discuss all these three ratios, and all are in which category? Profitability ratios.
Profitability.
Right?
Yes.
So first I am going to discuss gross margin ratio. Okay, what is the use of the gross margin ratio? So income statement, you are aware of the income statement, right?
Yes.
So let me draw the format, and we will see how to use the data given in the income statement to calculate these profitability ratios. So first we usually take revenue, let's say revenue 15,000, and from this we subtract what? Cost of goods sold. Cost of goods sold. Okay, suppose cost of goods sold is 8,000, or let's say 7,500. So what will be my gross profit?
7,500.
Yes, 7,500 is my gross profit. Clear? Then from gross profit we subtract what? Expenses.
Yes.
Clear? Let's say expenses, we have salary, rent, advertisement. Salary 1,000, rent let's say 1,200, advertisement let's say 800. The total of my expenses is coming to $3,000, right? So from 7,500 I will subtract my total of expenses, that is 3,000. So I got how much? 4,500, and this 4,500 is actually what? My net profit. Clear?
Yeah.
Yeah, this is what we do in the income statement. We calculate gross margin, then we calculate net profit, or net margin, you can call. Now, using this income statement, now we need to calculate these three ratios. First, I am going to calculate gross margin ratio. So, see what is the formula of gross margin ratio. So, gross margin ratio. So, formula is gross profit multiply by 100 divided by revenue, net revenue. Revenue, or you can write net revenue. Net revenue means it sales minus sales data. Got it?
Yeah.
So let me use this data. So what is my gross profit in this example?
7500.
7,500, right?
Yeah.
Multiply by 100. And what is my net revenue?
15,000.
15,000. So what will be the percentage? 7,500 multiplied by 100 divided by 15,000. So it will come how much? 50%. Got
Yeah.
it? It means my gross profit is 50% of the revenue. How you will interpret?
Yeah.
My gross profit, which is 7,500, is actually 50% of what? A revenue.
The revenue.
Got it?
Yeah.
So this percentage should be higher every year, or it should be lower?
Higher.
Higher. Because if we know our gross margin ratio is high, definitely our net profit margin will also come high,
High.
usually. If my
Yeah.
gross profit is more, definitely I will have more profits to recover my expenses.
Yes.
More amount of profit I will have to recover my expenses, right?
Yeah.
And leftover money will be my profit, net profit. And that will also usually will come more if my gross profit is more. So every year we should try to increase this gross margin ratio. This year 50%, next year we should try that it should come 55. After that, next year we should try it should come 60%, like that. We should
Yeah.
always try to increase this gross margin ratio, isn't it?
Yes.
So
Yeah.
how you can increase? What are the strategies you will follow? Tell me, any idea?
To like maybe like try to buy it from a different seller who has like lesser expenses.
Hmm. Or can we say that try to increase the revenue
Yeah,
by
basically.
exploring new market?
Yep.
Suppose I am selling in India only. Okay,
Yes.
in India my revenue is coming 15,000. If now I
Yeah.
started selling online, e-commerce, and many people from abroad also started buying my product. Earlier I was
Yeah, so
selling
like
through my shop offline. Now online I started. So my revenue now increased how much? Now it is coming to 20,000.
yeah,
Okay. So what is the first strategy? Try to increase the revenue. And
yeah.
one idea I gave. What is that idea? If you are not selling online,
To-
start selling your product online or explore new
Yeah.
market. Like you are selling product for, suppose you are in clothing business, ready-made garments. So you are selling clothes only for men. Now
Yeah.
how to introduce women clothing also.
Women clothing
So
also.
this is
Yeah.
exploring new market, na?
Yes.
And
Yeah.
another strategy is what? Try to reduce your this expense. Which expense? Cost of goods sold. Try to reduce it. How you can
Yeah.
reduce? Can you tell me what is the strategy?
Okay, so for to calculate cost of goods sold, we have purchases
Mm-hmm.
and purchases returns, and then wait, no. Yeah, purchases, and then we
No, no.
have
Now can we focus on purchases?
oh, okay, yeah.
Like we
So
know purchases is past part of cost of goods sold. If I reduce my purchases, cost
then
of goods
cost of
sold will
goods
also be
sold,
reduced, right? Now how to reduce purchases? Suppose earlier I used to buy from supplier A. Try to understand, okay? Who is my supplier?
supplier A.
A. And he used to charge me, let's say, 7,500. Okay. Now I thought, why every time I am buying from A? Let's explore the new supplier, B. So I
Yeah,
asked him, are you able to supply me this product? He told, okay, no problem. And how much he told me the price? He told 7,200 only I will charge. right? Because all
Yeah.
supplier are not selling the product at the same price.
Yeah.
So we need to give some time. We need to explore. We need to research that our product, who all are the supplier and which supplier is giving a reasonable rate. So next
Right.
time tell me, I will buy from A or B?
B.
B. Now by doing this, don't you think my purchases will be lower?
Yes.
Purchase amount will come less, na? So cost of goods
Yep.
sold will also be less. When cost of goods
Yes.
sold is less, definitely my gross profit margin will increase. Explore new supplier, bargain with them, ask for discount, right? So understood gross margin ratio.
So basically, we're just trying to reduce the cost of goods sold.
Cost of goods sold reduce or increase the revenue.
Yeah. Okay.
Two ways. By doing these two ways, you can increase your gross margin ratio. So if your gross margin ratio is increasing, definitely you will have more profit to recover your cost expenses, I mean, and plus you will have more net profit. Now, next ratio which we are going to discuss is a net margin ratio. Net margin ratio, and the formula is little bit changed. In place of gross profit, now I will use net profit. Okay, tell me what is my net profit here in this example, in this income statement?
4,500.
4,500, right? Multiply by 100 divided by net revenue. So let me calculate 4,500 multiplied by 100 divided by 15,000. So it is coming how much percentage? 30 percentage. Next year, try to increase it to 32 percentage. After that, 35 percentage. So every year you should try to increase this net margin ratio. Then we can say that business is constantly, improving. So formula understood? Net profit margin means what is the rate of my net profit to net revenue. Clear?
Yes.
Now, can you tell me how you can increase the net margin ratio? What strategy you will follow?
Uh, to increase the net margin ratio, we can increase the net profit.
Hmm.
So,
How
so
to,
for that,
how you will increase the net
we,
profit?
by increasing gross profit,
Okay, one idea. Second,
or we can like reduce our expenses.
excellent. We should reduce our expenses.
Yeah.
These are the expenses, right? So next
Yes.
time I will try that rent is coming to 1,200. Let me try to bring it up to 1,000. Means I need to be more cautious now. Okay. So these are the few strategy I can follow in order to increase my net margin ratio. Clear?
Yes.
And this net margin ratio we will compare with other businesses in the same industry. Like, so let's say there are two businesses. My business name is X Limited, and there is another competitor Y Limited. Okay. So this year my net profit margin coming how much? 30 percentage, right? Now in the
Yeah.
same year, my competitors, we both are in the same industry. Both are dealing with the same type of customers. My net
Yeah.
margin ratio coming 30%, but my competitor's net margin ratio is coming how much? 32 percentage. So who is performing more better?
Yeah.
Who is performing more better?
The competitor.
The competitor.
Violent.
So like this comparison is possible. So
Yeah.
I can compare with my competitor and I can find out that what should I do so that I can, defeat the competitor.
Yeah.
Okay. So these ratios will help me to find out whether I am performing better than competitor or still I have to do something to defeat my competitor. Got it?
Yeah. Yep.
Mm. So that comparison is possible, right?
Right.
Mm. Okay. So I hope these two ratios understood.